Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Well, will March 15th trigger a global reset? Now, March 15th is a very significant date for the global banking system, and we'll talk about why in just a few minutes. But I believe we're going to see a credit event. So we're going to see a financial meltdown before that time that leads to ultimately a great reset of the monetary system, not necessarily this year, but in due time. But why do I say that? Why do I say we're going to see this major credit event? We've talked about an economic crisis coming and a financial crisis coming. And we definitely, I believe we are in a depression right now. That's not officially acknowledged. Historically, they don't acknowledge those things until well after the fact, but I believe that time will show when they look back to this time that we're in a depression right now, and I believe we're going to see a credit event very soon, much similar to what we saw in 2008 with the collapse and bankruptcy of Lehman Brothers, which caused financial contagion throughout the world markets. So, why do I think that's going to happen? Why do I think? Well, because the global banking system is bankrupt, right? It's flat out bankrupt. And you may look around and say, well, it doesn't seem like that's the case. And that's true. It doesn't seem like that's the case because the central banks and governments of the world have managed to pull duct tape and Band-Aids and chewing gum out and keep that system from collapsing. But if you'll remember, 6 months ago, 7 months ago, the world was talking about bank runs, bank collapses. We saw the second, third, and fourth largest bank failures in U.S. history. We saw a global, systemically important bank fail in Switzerland. And we saw bailouts from the government in both instances that helped kick the can down the road. But inevitably, something has to happen. So what is going to happen? Well, I believe that they're going to keep raising the rates and putting pressure on these banks. And ultimately, they will choose to go the route of sort of seeing what happens, which is what they did with Lehman Brothers. Well, let's let this one fail, because we can't keep bailing them all out. And when they do that, well, then it's going to create this credit event, and then they'll try to come to the rescue after everything starts to collapse. But which they will be able to do, they will be able to rescue the banking system by creating currency, because the central banks, they can create all the dollars and yen and euros that they want to. The problem is, by saving the banking system, they will be destroying the currency. And that's an even bigger problem, which will require a reset of the global financial system. So let's take a look at what's happening right now. This is an article from the Wall Street Journal. It's titled, "Rising Rates Likely Hit Bank Balance Sheets in Quarter," meaning this past quarter. It says, "A surge in interest rates likely worsened unrealized losses on bonds and loans held by U.S. banks in the third quarter, further straining their balance sheets as they face pressure to pay more to keep depositors." So we've talked about this in the past. There are hundreds of billions of dollars in unrealized losses on bank balance sheets, meaning they purchased a bond at say $100, and now it's worth $70. Well, they haven't sold it for a loss yet, but what happened back in the spring is when depositors came to take their currency out of the bank, they said, "I want my dollars." Well, they had to sell those bonds in order to pay those depositors, and so they realized those losses by selling those bonds. And of course, we have depositors wanting higher yields now that rates have gone up. So People are looking around and saying, why is my savings account paying 0.1% interest when I can go put it in a money market and make 5% interest? So they're pulling their money out of the banks and into these money markets. And then we're also seeing, all these loans that were made at 2%, 3%, 4% interest have also lost value. Again, they're unrealized losses until those loan packages are sold, but they're still sitting there waiting is like this time bomb that's going to go off. So that's what's happening with the banks. Let's see what it says here. It says unrealized losses were a key cause of Silicon Valley Bank's failure in March, which spurred other bank runs. That risk has ebbed. I don't know where they're coming up with that idea, just because we haven't seen the bank runs after the government stepped in. But the risk has not ebbed. We haven't seen the bank runs, but that doesn't mean the risk has gone away. It says total deposits at U.S. commercial banks were little changed since the end of the second quarter, according to the Federal Reserve's latest data, although they are down 5% since their peak level in April 2022. The higher rates are due to a robust economy. I have to laugh at this. This is ridiculous. These things, they should be reporting what's happening, not inserting their commentary, which here is clearly wrong. We are not in a robust economy. It says calm in the banking system. Again, there's not calm in the banking system for those who understand what's happening in the banking system. We may not be seeing the headlines about bank runs and bank failures we saw back in the spring, but that doesn't mean that everything is calm and everything's wonderful. It says, and more recently, signals by the Fed that it will likely keep rates higher for longer. Again, always take the opposite of whatever the government or some government entity's official position is. So when the Fed says, we're going to keep those rates higher for longer, you can know that they're coming down very soon. That's just the way it is. They may intend to keep them higher for longer, but there's no way they can keep rates at the level they're at right now, much less continue to raise them, which they're talking about, for much longer without a complete and utter collapse of the global financial system, which is probably going to happen anyway. So just my 2 cents on their commentary here, but it says that has led to earnings pressure for many banks, now paying higher rates on deposits and other funding sources while the returns on their older fixed rate assets stay low. Banks are lending more at the current high rates, potentially easing that strain. And I would say, yes, they are lending now at higher rates, but they aren't lending more. We've talked in the past about how we're seeing a drop-off in bank credit. From the borrower's standpoint, there are fewer people who are willing to take on more debt right now, and fewer people who are able, even if they are willing. And then from the bank's standpoint, when they are seeing these deteriorating balance sheets from all these unrealized losses, the last thing they want to do is give out a loan to someone who's going to default on that loan. So their credit standards have increased, meaning they're lending less. So they're lending less. There's fewer people who are willing to take on that debt. So there's less lending going on right now. So understand what they may be saying here. They're lending at current high rates, but not necessarily more. Not enough to offset what is already on the balance sheet as an unrealized loss. It says, importantly, however, the industry has staunched deposit outflows for now. I expect unrealized losses to increase, said Alexander Yunkum, a banking analyst at the investment research firm CFRA. For us, solvency issues are less of a concern, but the amount of profitability is a concern. So, guys, he says he expects the unrealized losses to continue. I think prior to the third quarter, they were somewhere around $580 billion in estimated unrealized losses for the U.S. banking system. Now the estimates are somewhere around $700 billion. So the problem is getting worse, not better. Yet he says, we're worried about profitability with these banks. Solvency issues are less of a concern. Well, why are those solvency issues less of a concern? Well, it's because of what the Federal Reserve did back in March when we had these bank failures. They instituted something called the Bank Term Funding Program. And essentially, it was a bailout, right? They said, well, it's a temporary bailout, right? So these firms could lend these assets that had lost value to the Federal Reserve, and the Federal Reserve would provide them with dollars equal to the original value of what they paid for those. But it's considered a loan. And those loans, in theory, I don't think in practice, but in theory, they're due on March 15th, meaning that program comes to an end. So what's going to happen then? So let's take a look at this program. So this is from the Federal Reserve Bank of St. Louis. It's their official data. So this is the Bank Term Funding Program. So as you can see, this didn't exist until the banks collapsed. So let's condense this and look at the past year. So here on March 8th, this didn't exist. Then all these banks started needing basically a bailout from the Federal Reserve to the tune of $11.9 billion, $53 billion. Around June, this reached $100 billion, and it currently sits at just short of $108 billion. And as you can see, well, if this was temporary, wouldn't these banks be unwinding some of this, their need for this program, wouldn't it be going away? But it is not. So the question is, come March 15th, when this program supposedly ends, all these banks, they're not going to be able to, we know right off the bat, they're not going to be able to pay back $108 billion. So there's only two things that can happen. The program comes to an end and the banking system collapses, or the government extends and pretends, which I think is probably the most likely thing to happen. As Ronald Reagan said, nothing lasts longer than a temporary government program, but we're going to see this extended is my best guess. But what does that do to the currency when you basically say, we'll print all the dollars we need to keep the banks from collapsing? But guys, I don't think we're going to have to wait until March 15th for this to happen. I think we're going to see a major event take place before then, because what's going to happen is when you start to see these cracks in the banking sector, and I think there's a lot going on right now. That's why we've seen markets gyrate the last few weeks. They get a lot of criticism for the bailouts that took place back in the spring. And there were a lot of politically connected people who were involved in those bailouts. And if you remember, I believe it was the senator from Oklahoma said, well, one of the banks in my state fails, are they going to get the same treatment that Silicon Valley and Signature Bank got? And the answer was, well, we'll see, right? Meaning, probably not. We're going to see who politically connected would realize a loss from that. And if there's nobody, then we'll let it fail. But what most people don't know, and inevitably they're going to try that. There will come a time when one of these banks, they'll say, let's let it fail. We think the damage will be limited. They'll be wrong. But what most people don't understand is following the financial crisis, the great financial crisis 15 years ago, in the United States and in many nations all over the world, they passed legislation changing the law because a lot of people were upset that the banks were bailed out with taxpayer funds. So they said, never again. Instead, the banks will be bailed in. most people would say, bailed in? What does bailed in mean? Well, if you live in Cyprus, you know what I'm talking about. You can look up bail-ins and read all about them. But essentially what happens is any money in the bank, any cash in the bank that is above the $250,000 FDIC threshold will be used to bail out the bank. They'll call it a bail-in. So let's say you have $1 million in the bank and the bank goes bankrupt. Well, you'll get $250,000 cash from the FDIC, and then the remaining $750,000 would be used by the bank to keep them from going bankrupt. And in exchange, you'll receive a little piece of paper, right? An IOU, basically saying you are now, an equity holder in the bankrupt bank. Aren't you lucky, right? So you'll receive all these maybe stock certificates that are worth pennies on the dollar, if that. And which won't be much consolation to many people. And many of you might say, well, that doesn't bother me. I certainly don't have more than $250,000 in the bank. But keep in mind, many people's employers do. And even if you're not employed by a company or owning a company, perhaps one of your loved ones does work for a small company that has a $3 million payroll account at their local bank. When that bank fails, that business most likely fails as well, because they would get $250,000 cash and the remainder in the form of this equity in a bankrupt bank. They won't be able to meet payroll, their employees won't get paid, and the business will probably collapse. And then the other businesses that are owed money by that business, they won't get paid either. So my guess is the government, just as they did with Lehman Brothers, they're going to say, well, let's let this one fail and see what happens. And then they're going to go, oh no, what did we just do? Because it's going to create an absolute contagion. And they may look at it and say, well, it'll be limited to this general area, but it will not, because once that happens, let's say it is a small bank in Oklahoma. The people at the Federal Reserve, they may think, well, the damage will be limited to this area around Oklahoma, maybe a few businesses outside of that. But it will not, because every business owner in the world who watches that will say, oh no, we need to move our payroll to JP Morgan or some other bank that we think is too big to fail. Probably JP Morgan is the only one that would politically connected enough that they would never be allowed to fail. So everybody's going to be, that has more than $250,000 in a bank, is going to be moving their cash to JP Morgan. And you will see a bank run like we saw bank runs in the 1930s, except it's all going to happen in a couple of days, not over the course of a couple of years. And we will end up having what I talked about before, which is a bank holiday. Last time we had one of these was in the Great Depression. The banks closed for a week. And so this will likely happen over a weekend. You'll wake up on Monday morning and you won't be able to withdraw cash from the bank. A lot of banking services will be limited. You'll probably still be able to pay bills online, but it's quite possible that you may not be able to do that for a few days. It's quite possible that credit cards won't work, debit cards won't work for the course of a week or two. And that can have huge ripple effects throughout the economy. If credit is not available, then goods and services aren't going to get transported to where they need to get transported to. You'll see gas stations run out of gas quickly. You'll see the grocery stores and the restaurants run out of inventory. We've been over this in the past. Now, I don't think that's going to be a long-term thing, a few days, few weeks, but I would be prepared for that going into every Friday. Make sure I had a full tank of gas and a full pantry as we move forward, because the risk of this is rising with really every passing day that we'll see something like this. And of course, a financial contagion like this, a credit event like this, is going to have monumental consequences for the global economy. Beyond that, who knows what happens? I think that the government is going to print currency 10 times over what we saw with the pandemic, where they'll be sending checks to people, because when you have millions of people unemployed, millions of people that can't pay their rent or their mortgage, can't buy food, the government is going to print checks, send those to people. We may very well see them say, well, to get this cash to you faster, go claim your digital wallet. And we'll put $10,000, $20,000 in there. This may be how they push us into central bank digital currencies. I have no idea how this is all going to unfold. I don't think anyone does, because the chaos of an event like this leads to, people in the streets demanding change, panicked politicians pushing for change. It's going to lead to the rise of demagogues. So guys, this is the type of economic conditions that transform the world and make history. And I think we're on the verge of seeing this here soon. Again, we're in a depression right now. Most of you understand that. The mainstream corporate media hasn't acknowledged that. And most people won't acknowledge that until we see massive layoffs and a stock market collapse similar to what we saw 2008, 2009. I think we may very well see a stock market crash similar to 1929 and 1987, when we see a 1-2 day plunge that just shocks everyone. Now, we can't have something on par with what we saw in 1987. That was, I believe, a 22.7% drop in a single day, somewhere along those lines. But they have circuit breakers built in now where the most the market can drop in a single day is 20%. It would not surprise me to see that right now. We have just bond losses that are really unprecedented. And we have a stock market that's one of the most overvalued stock markets since the dot-com bubble, since 1929. So we have all these banking issues. We have the commercial real estate crisis that's also taking down those banks. So guys, be prepared for this stuff. This could set the stage for a lot of events to unfold in Bible prophecy, because again, these types of events lead to the rise of demagogues. And they lead to the institution of measures that take away people's freedom. And we could see people demanding central bank digital currency so that they can go buy groceries. We may see things like rationing, and, well, you have to have a digital ID in order to make sure that you're only getting your fair share. Who knows what we could see, but let me know what you think. Again, March 15th, this program comes to an end or doesn't. I think they'll have so many emergency measures in place by then, it'll be an afterthought that this thing is continued. Because I think before then, it's going to crash. But if that's not the case, it will become clear to the market at that point that the central banks of the world are simply going to print currency to bail out the banks, no matter what the cost, even at the cost of the currency. So guys, on the other side of this depression and this financial crash, it sounds strange, but on the other side of that, we're going to end up seeing hyperinflation, because at first, you're going to have the destruction of all this built up credit, government debt, that's going to cause a deflationary spiral similar to what we saw in the Great Depression. But the governments today will just run the printing press, and it'll take some time, depending on how bad this is, for that to make a dent in this. But ultimately, it's going to lead to runaway inflation and a collapse of global fiat currencies. So all of this, guys, this is going to be the worst financial crisis the world has ever seen. And we know what happened during the Great Depression. We know World War II is what emerged out of that. So we'll pay attention and see what happens. Maybe I'm completely wrong. If you think so, leave your comments below. But I think that we need to be prepared and ready for this right now. Be prepared to go through some uncomfortable times in the days and weeks ahead. So let me know what you think. Leave your comments below. Make sure to hit the like, share, and subscribe buttons. And God willing, I will see you on Wednesday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.